Hello everyone, welcome to the Technical Investor channel. So in today's video, we're going to look at candlesticks. Now candlesticks is the basic or the most important thing that you need to understand if you're trading price action, or if you're a technical analyst, or if you want to be a technical analyst, or if you want to use technical analysis for your trading and investing decisions. Now it's very important to understand candlesticks because just looking at these candlesticks and understanding where they're forming, you can actually take a decision of whether you want to buy or sell. And you don't even have to use any indicators to take a buy or sell decision if you understand what candlesticks are and if you understand what is demand and supply. Now, if you don't understand demand and supply, there is also a video I've done based on that. So the link should be there on top. Do take a look at it if you don't understand demand and supply. So let's take a look at this video and let's ensure that you learn what candlesticks are. So to begin with, I'm going to show you this chart which I took from thestreet.com, which is a brilliant chart to explain what candlesticks are. Remember, candlestick is nothing but a Japanese term to represent the price action in markets. So anything that you buy in this world has a price, and similarly in markets also, every instrument that is traded has a price. And this Japanese candlestick, represents the price action really well. So there are some components to the candlestick that you look in TradingView or any charting tool that you use. So there are two candlesticks primarily. One is a red candlestick, which indicates that the price opened at a level and then it closed below the level. For example, in this case, let's say the price opened at 100, but then it closed at, let's say, 90. Now that means that that was a negative day, or basically investors lost money on that day, and it indicates a red. Red is basically it's not good, and that's why it's red. Then you have a green candle, which basically represents that the price opened at 100, and then at the end of the day, the price closed at, let's say, 110 or 120 levels. So basically the price must have closed at a higher level. That represents that the investors had a good day or traders had a good day, and the price actually did well for that day, and the bulls had a good day as well. But there are four price points that you can see in any candlestick. So one is, in a green candlestick, this is the open, which means when the market opened during the day, in India, the market opens at 9:15. So the open tick, or the first trade that happened during that day is called the open price. And that open price, basically absorbs all the news that happened overnight. So example, let's say today was a Sunday, and there were, over the weekend, there's a lot of news which came. And then Monday, the market opens at 9:15. The market tries to react to what happened over the weekend. And that's what you see as open price. And then during the day, the price can go to whatever level is high, or the price can hit a low at any point. Now let's take an example of price open at 100, right, for the day. And then the price, let's say during the day, it was some bullish news. The market's really happy and the price went all the way high. And then because of, let's say European markets open in the afternoon and then the price came all the way down. Or you could also assume that the price opened at 100 and the market's not really happy with some news, so it hit a low. And then during the day, price went high because the markets realized that it's a good news, and then the markets closed at, let's say, 110, right? So we opened at 100, we went low at 90, then went all the way to 130, and then we closed at 120. So that was a 20% gain because 100 was open and the close 120. Now in candlesticks, the open and the close are very important because open tells you how markets is reacting to this price. But then during the day, the investors and traders or the traders during the day come to a conclusion as to, this is how much we should give the price. And depending on the greed and fear, depending on investors' reaction, depending on all our emotions, finally there's a settling price or settles during the day, right? So we finally close at 120. Now, closing price is very, very important because during the day, after hundreds and thousands of trades, the market has come to a conclusion that this stock will have a closing price of 120. Now that shows that the markets have been really bullish on this stock. Right now, this is all you have to understand when it comes to candlestick. Right now, remember, whenever you're looking at a closing, whether it's a daily chart or weekly chart or monthly chart, if you have a very good closing and if you have a very strong, big body green candle, then that is a very, very bullish sign. So we'll look at more examples going forward, but the same applies to even red candle. Now let's say during the day it opened at 100 here, and then the stock hit a high of, let's say, 120, and then the stock started going down. Now finally the stock hit a low of 90, and finally let's say stock closed at 100. Now that means that even the stock opened at 100 and went to 110, but eventually the stock, markets are not really happy with whatever it was, or markets have knew all this news already, and then the markets eventually closed lower. That isn't really a great day for markets. And again, if you have a red candle on a weekly, daily or monthly charts, it definitely depends on where it occurs, but a red candle for that period is definitely not a good sign. right? Now again, it depends on what kind of red candle you have, what kind of red candle you have, but just to keep it simple, a red candle means bearishness, right? Now we'll get into examples. I'll also teach you how to look at red candles. Not all red candles mean bearish. Some red candles also mean bullish depending on where it forms, and some green candles also mean bearishness when it forms depending on where it forms. Okay, we'll take a look at that shortly. But if you do have questions on this very basic concept, do tag me on Twitter or do comment your questions and I'll help you understand. Also, there are some nice threads I've written on Twitter, and I'm also, that will help you understand these candlesticks much better. So let's move on to understand some of the candlestick interpretations, right? Now, a green candle is also a white candle. So some people use white candle also to represent a good green day. Some people use a black candle to also represent a candle. So if you see a green candle or a white candle, it means bullishness, or the markets opened and closed even higher. If you see a red candle or a black candle, it means a bad day. Basically, price opened at higher level and then it closed below that level. Okay. So now let's take a look at this example here. Now here, if you see the open price and the low price is the same, and the close and high price is the same, which means the price opened here at 9:15. It just kept going higher and higher, and it closed at 3:30 in the markets. It closed right at the top. Now this means that this entire day, literally everyone just wanted to buy the share and it just kept hitting higher and higher and higher. So this is nothing but probably a stock which had so much of bullish news, and it just kept hitting higher because of some really good news. The reverse happens and you see this kind of a candlestick, right? Now here the stock opened at a high price and then it just kept heading lower and lower, and finally eventually it closed at the lowest point of the day, and markets had a very bad day that day. Now these candles, if you see a green candle like this or a white candle like this, it's very, very, very bullish. Okay, it's the maximum bullishness that a stock can have, and this is the maximum bearishness a stock can have, or the worst possible candle that a stock can have. Okay, so now this is one example. Let's move on to the next example. So next example is nothing but indecision candle, right? Now here, if you see, the price opened around this zone, then during the day it went low, and then it went higher, and then eventually closed on the same level as the open. Now here, the opening and the closing price is almost at the same level, right? Now, which means that even though the markets had reaction during the day, the sellers and buyers could not really decide, what to do on that day, which means that neither there was a very strong buying or neither there was very strong selling. So basically, they had concluded, okay, neither the buyers won or the sellers won. So 50-50, and it ended on a flat day. Okay, so this is, you can't call this neither bullish nor bearish. Okay, but some people, depending on where it forms, you can say that the trend has paused. Okay, so previous, let's say if the stock was an uptrend and then this candle formed, we are saying that this stock, the trend has paused, and now whether it will head higher or lower from here is anyone's guess. Okay, so this is an indecision candle. Now, the previous candle that we discussed here is called a strength candle also, or a candle which has a very strong body. Now, this one, we don't call this as a strength candle because there's no strength here. Neither buyers had strength nor sellers had strength. So here it's called an indecision candle. So basically, there was no decision whatsoever by buyers or sellers. Whereas in this case, buyers clearly won, and in this case, sellers clearly won. Okay, so I hope you understood till now. If you do have questions, let me know in the comments. Now, coming to the next example. Now, in this case, what happened here is the markets opened here, then it went all the way high. It did not make, sorry, that's a high price. That's a mistake from my side. The markets went all the way high, and then eventually there was so much of selling that the stock came and closed around here. Now, obviously, I'm sure you understood already. Now, this is a slightly, or in fact, a very bearish candle, because the candle almost, it opened much higher, but it came and closed here. Okay, and I'm just giving you some examples. I'm not really getting into names. You don't have to really understand names, to understand what a candlestick means. Now, I'll also make another video where I'll explain these candles and tell you how to make decisions without knowing the names. Okay, it's pretty straightforward. The names, I feel, just too much complex to understand, and they have to be named. That's why they're named. Okay, so whenever you see such a long wick, so basically the price went all the way up, and then sellers sold, and the price closed low. So this clearly shows that the stock has not had a good day. Okay, now coming to the last version I want to discuss today is the reverse candle. Now here, the price opened here, then it went all the way low, but then there was some strong news, or people saw value in the stock, then it reversed all the way and it went and closed higher. Now this is a very strong bullish stock. Again, depends on where it forms, but overall for me, this is a very strong bullish sign in a candle if it forms. Okay, now these are the 4 different versions I wanted to discuss today. So I'll just give you some examples as to how to identify, candlesticks here. Now in this case, if you see here, I've taken an example of Nifty 50 quarterly charts, right? So this is somewhere 1991 to 2000. Now let's take some examples of what we've discussed till now. Now here, these candles that I marked here, this one is a very strong bullish candle because you see a strong green candle all the way up. It's a very strong green candle, so it's very bullish. Again, this one also is a very strong bullish candle because you see that candle big, and this one and this one. So whenever we see a very strong green candle and the price is heading higher, which means the stock is doing well, or there is some really strong buying because the stock is heading higher. Now, it could be because of news, it could be because of demand, whatsoever, but you need to understand that that's what you want to be buying, because that's the first case. The second case is full body red candles, which is very, very bearish, right? So bearish here, if you see, we have a strong green red candle here, we have a strong red candle here, and we have strong red candles here. And these candles are very bearish. So whenever we see after a green candle, if you see a red candle like that, you need to be cautious, and the stock, there's a chance the stock might consolidate or correct from there. Okay, that's the second example. Third example is green candles with upper wicks. Now remember, I explained the previous here, these are called wicks, right? So these long lines here, these are called wicks. So if you come here now, if you see these green candles, these are green candles which shows that the closing price was higher than the opening price, but they had wicks on the top. Now when you have wicks on the top, which means selling came, a lot of people were selling because the stock could not sustain, and the stock then closed lower, because of which we see such candles here. Now you see even here or even here, you see these candles are not really good, especially if it forms after an uptrend. Okay, and that signals that sellers are probably taking over and buyers are losing strength. So that's the third example here I want to discuss. So these candles means they are not, we can't be very bullish anymore. Now this is very bullish, but this is not very bullish anymore, right? We can't say bearish, but we're not very bullish anymore. Okay, now next one is here, the same concept, but with red candle here, right? You see red candles here with lower wicks. So when these lower wicks form, it means that the price went lower, but then there was so much of buying because the price again lifted and came higher. Now what does it indicate? It indicates that there was buying pressure, and indicates that probably sellers have lost the strength, or sellers are losing here in this game, and buyers are stepping in here. Now this means that we were bearish before when such red candles formed, but after seeing this candle, we will not be any more bearish, right? I'm not saying we'll not be bullish, we'll be bullish. I'm saying we will not be any more bearish, or will not be any more very bearish like how we were before. Okay, and then you see candles like this, right, where you have upper wicks plus lower wicks. Now just go to the previous example. Here we saw upper wicks only, here we saw lower wicks, but when you have upper plus lower wicks, then that's definitely a sign of indecision, right? Now we have upper wicks as well, which means there was selling pressure, and we have lower wicks also, which means there was buying pressure, right? So when both happen, there is indecision, because of which that's a pause in trend, right? And you see up here, after this, next week also, next quarter also, we kind of stayed sideways, and same thing happened here. We stayed sideways and then we started going down, right? Now these all indicate that the trend is pausing, and we do not know yet whether the trend will go up, whether it will continue, or whether it will fall. So what's important, or the summary of this video today, is you need to look at the candle body, you need to look at the candle wicks, and then you can take a decision. If the wick is on the top of the candle, you need to be bearish, definitely, and if the wick is on the bottom of the candle, you'll be bullish. If the wick forms on both the top and the bottom, then it's indecision, and you know what's going to happen. You wait and you see what the markets are going to do. So I hope you liked my analysis on candlesticks, and you hope you liked how I interpreted candlesticks, and I hope I made it simple for you to understand. Do let me know in your comments, do let me know your questions, and I'll answer them. But that's it for today. Don't forget to subscribe to my channel if you did like my video, and don't forget to like the video as well. I'll see you in another video. Until then, take care, stay safe, and trade safe. Bye bye.